Well, let's get straight into some analysis of the markets picture over on that end. As I said, we had Kenyan shares rallying for an 8th straight session over on Friday. What are you making of the kind of momentum that's hit the Kenyan market scene and the sustainability of it?
Thank you, Alishia. Yes, the year started off on a high note in Kenya. We saw a lot of activities from foreign investors in the first few weeks of the year. But in the last week, we saw a lot of activity from local institutional investors who are actually driving the market to the recent high of 43.49. We are seeing a lot of activity from local institutional investors on some of the undervalued counters, such as, like you alluded, KenGen, in the KPLC. They're investing in those counters at the moment. They're buying the dips so that to ride on the bull run and then offload them later on.
Let's hone in on KenGen, because it's Genghis Capital that actually improved its outlook for the company, and that seeing some share price reaction, as I said earlier on Friday. KenGen hitting 10 shillings 10 by the end of the session. Run us through the prospects for the company as you see it over at Genghis.
Okay, this is a note that we wrote, that we published last week. With regards to KenGen, it's a company that we feel is very, very undervalued. If you look at the projects that it has undertaken and is planning to undertake to increase the supply of power in the country. If you look at what they have done in the wind power projects, what they are doing for geothermal, basically they want to decrease their reliance on hydropower and increase their reliance on the green energy prospects. So in terms of financial aspects, we believe that they are increasing the supply of the country at a much lower cost compared to the current hydropower and diesel generation power. So they basically increase their supply at a very, very minimal cost valuation. That's why we gave it a valuation of 20 shillings 90.
That is certainly encouraging, and will be interesting to see just how much price action we see on the back of that news as we move through to today's session. Moses, let's put the spotlight on the kind of implications the MPC's rate cut decision has had on the markets. As I said, investors heartened by the fact that this will mean more in the pockets of investors out there. What did you make of that slash in interest rates, of course expected, but coming in higher than expected?
We did expect a rate cut. Majority of analysts and the industry as a whole expected a rate cut of the region of about 100 basis points. So that didn't come as a surprise. We saw a lot of pressure on the currency in the last week, or in the final days before the MPC meeting, and we do anticipate that will continue. Now that the fact that they have cut it to 9.5%, we do expect much more pressure on the shilling, and we do anticipate that the CBK will continue intervening into the market to counter that effect. But we see the US dollar weakening to levels of 88 shillings, and if that is breached, we could see 90 shillings being our next target price.
Let's move on to your outlook for the week ahead, Moses. I mean, as we've been talking about, it's positive momentum that's struck. What do you see being the drivers of the market as we move through this week?
We do expect a lot of foreign investor activities, like week on week. Last week, if you look at foreign investor activity compared to the locals, it was more 50-50, with the locals dominating the final 2 days of last week. So we do anticipate that to carry on forward, and we do anticipate new highs to be set. But we don't. We put our ceiling at about 4,500 level. If that is breached, then we could see an ultimate high of 4,700 going forward. But we do anticipate the current momentum to continue in this coming week.
There are a few headwinds that we have to take into consideration, though, and making headlines is the fact that a third of the insurers over in Kenya risk a ban for failing to comply with regulatory requirements by the December deadline, with the breach of ownership coming up top. I mean, could you discuss some of the implications that we could well see as a result of this on some of the listed insurers?
Okay, the main issue that's surrounding the insurance industry is it all boils down to the shareholding. They have set a cap of 25% shareholding by an individual, but most of these companies are owned by huge, some of these companies have individuals owning about 40%, 50%. Some families own about 70%, like ICEA Kenya is owned by the Degwa family. So when the AKA came up with the regulatory filings that they came up with, we do this is more about corporate governance going forward. It's something that they want to protect other shareholders coming in, and it could be one of the reasons why we're seeing why we saw UAP coming into the market doing a public offer, so that they could infuse and dilute the shareholding structure, and we could see other insurance companies following the same path to comply with this regulatory rule.
Where the spotlight is on corporate governance, Moses, what do you make of the headline that the capital markets regulator has set the stage for further scrutiny of directors' roles in the management of listed firms?
Yeah, this all boils down from what happened last year with East African Portland with CMC. CMC has, the suspension has actually been extended to March 2013. So it all boils down to protecting the minority shareholders who may not have as big as, say, as the major shareholders. So it all boils down to protecting the minority shareholders. And I do commend CMA for coming up with such regulations, and corporate governance should be vital when it comes to listing of a company.